Good afternoon. Welcome. You're with us here on the Business Today show. I'm Aabha Bakaya. Let's get you all the market closing action. But first, a look at what's making headlines this afternoon. RBI pauses its rate cut blitz after a steep 125 basis point cut in the last year. Governor says the Indian economy shows strong growth momentum with trade deals amid global uncertainties. But the big news is doubling of the limit of collateral-free loans to MSMEs to 20 lakh rupees and easing of registration rules for NBFCs. RBI to issue 3 draft guidelines for customer protection relating to mis-selling, recovery of loans and recovery agents. Liability of customers in unauthorized electronic banking transactions to be limited. Framework to compensate customers up to 25,000 rupees for losses incurred in small value fraudulent transactions also under consideration. Markets remain volatile after RBI policy. Nifty slips 20 points near 25,600. Sensex up 50 points at 83,400. IT and PSU banks drag, while FMCG stocks provide support and limit the downside. Cigarette stocks surge on value buying. ITC jumps 5%, Godfrey Phillips 11% as investors bet on price hikes and earnings resilience despite higher GST and excise duty impact on the tobacco sector. Volatility grips gold and silver after the U.S. Embassy in Iran advised American citizens to leave immediately, citing risking security risks. Silver briefly recovered before plunging 8,207 rupees to 2.35 lakhs, while gold up nearly 1% before turning flat. Meanwhile, risk assets surged, Bitcoin, oil and gas prices jumping sharply. Well, news coming in for you at this hour. Max Health is discontinuing its high-value chemo drugs, and these are for institutional patients. Max Health has been in talks with the government on drug pricing central scheme, and these drug prices, according to them, are unviable. So with such low margins hitting these high-value drug supply, Max Healthcare has actually said they're going to ease up on these altogether. They've tied up with insurers for a price hike at this point. Let's go across to Neetu Chandra. She's tracking the story. Neetu, take us through in details what Max is saying when it comes to the pricing of these chemo drugs.
So yes, this needs to be seen in context. Max Healthcare reported steady Q3 performance, but it also flagged some specific cost pressures. High-value patented chemotherapy drugs are extremely expensive, while government schemes like CGHS operate on fixed tariff structures. So in some cases, these tariffs do not fully cover the cost of procurement and delivery. As a result, the company has paused certain high-cost therapies for institutional patients, even as it remains in discussions with the government on pricing. This does not actually indicate a withdrawal from cancer care, but rather highlights a challenge of aligning public pricing frameworks with economics of advanced medical treatments.
Max has also said it has agreements with insurance companies on annual price revisions. Neetu, what does this tell us about how different payer systems are working?
So what this highlights is the difference in flexibility between payer models. Private insurers generally allow for periodic price revisions, which helps hospitals adjust for rising input costs, inflation and newer therapies. So government schemes, on the other hand, follow standardized tariffs that are revised less frequently. This difference becomes particularly relevant for high-cost patented drugs. Hospitals find it easier to sustain advanced therapies under insurance-led pricing than under fixed public tariffs. So the broader takeaway here is that as healthcare becomes more complex and expensive, pricing mechanisms across payers may need to evolve to remain sustainable.
All right, we're joined by Mr. Chokkalingam this afternoon as well. Neetu, thanks so much for joining us on the pharma space. Mr. Chokkalingam, good afternoon. Let's first get your take on markets. Range-bound trade today, the RBI policy sounding very positive on growth. What's your key takeaway?
Yeah, good afternoon. I firmly believe that worst is getting slowly over, and I have been saying all along that market weakness may continue till mid-March or end of March. I think this is a fabulous buying time because a lot of small and mid caps have been, crashed anywhere from 20 to 50% in the last 1 year. And the optimism comes from the fact that both European Union and US are likely to, European Union has already done it, and America is also likely to sign a trade deal amicably. This is going to be a big trigger. Otherwise, domestic economic story remain intact, whether you take a growth or food grain, agri sector. So many areas of macroeconomic parameters to show a lot of strength. And RBI also, I still believe there is a room for further rate cut because inflation is very low. So this time they have passed it because the rate transmission by the bank is still not happening fully. So one can definitely expect a further one more rate cut after 2-3 months. So considering all that, and also considering the fact that the broader market, particularly small and mid cap stocks, are available at a very, very attractive valuation, I believe starting from April, we can see substantial recovery and rally in the market. Small and mid cap will outperform. And till March, the illness may continue, but that would be used as a buying opportunity. This is my strong and firm view.
All right, Mr. Chokkalingam, looking at the movers today and talking about the financials, of course, seeing a boost. Some of the financiers are seeing a boost, but outside of that, select private sector banking names are also moving. The PSU is a little quieter today, even though we are watching out for some divestment news on that front. Outside of the banks, and yes, we were just looking at ITC on the screens, and that's on the back of some amount of positive optimism on those cigarette prices. So that's why we're seeing some amount of move on that one, but also on a few of the other FMCG majors as well. What are you spotting in today's trade? Would you like to give us your strategy on an ITC today, up 5%?
Yes. We recently gave a buy recommendation after it was beaten down post rate hike. The reason is that if you look at FMCG business segment and compare the valuation of FMCG with the pure play FMCG companies like a Godrej Consumer, and then superimpose the valuation of the paper, IT service business and agri business, and also on a reduced to profit of cigarette around a 15-16 PE, I believe even through conservative approach, ITC is worth 377, 380 rupees range. And therefore, I find very good opportunity at current level. And also, the cigarette is largely price inelastic. Yes, for steep rise in the duty, it tends to, show impact on the demand. But in my learning, over a period of time, say beyond 1-2 years, the cigarette volume again comes back to normal from the regular customer, existing customers. So all this would augur well for ITC. As far as public sector banks, yes, today they are lagging behind private sector banks, but public sector banks have reached a 10-year record high level of quality of assets. They have a very high exposure to low-cost deposits, and they still beat industry credit growth, most of them. So and also they trade at a value of 1 to 1.2 times price to adjusted book value. So I believe this is a good opportunity to buy them. Ultimately, the PSU banks also will outperform the market as well as private banks.
Okay, well, the Reserve Bank of India has proposed fresh measures to strengthen customer protection, including draft norms to curb mis-selling, regulate loan recovery practices, and limit liability in unauthorized digital transactions. The RBI has also proposed compensation of up to 25,000 rupees for small value frauds and plans to enhance digital payment safety. Listen into the governor.
The Indian economy continues to register high growth despite a challenging external environment clouded by geopolitical uncertainties. Benign inflation provides the leeway to remain growth supportive while preserving financial stability. We remain committed to meet the productive requirements of the economy and sustain the growth momentum.
Let's also go across to Aishwarya Patil for more on this. Aishwarya, take us through what some of these measures will mean in terms of added security and benefits going forward.
Well, as we prioritize, setting up digital public infrastructure in India, these guidelines will play a crucial role. So to empower our customers or Indian citizens, and for this, they will be issuing, in fact, three draft guidelines on this. One will be relating to mis-selling. A lot of these fintech products are sold and the details of it are not given to customers. So mis-selling is one of the menaces. Two is regarding recovery of loans and engagement of recovery agents. So you see every other day many spams as such, selling you loans that have interest rates skyrocketing as well. So these kind of products will also come into this safety net. Three, on limiting the liability of customers in unauthorized electronic banking transactions as well. So a discussion paper on these possible measures in order to enhance the safety of digital payments, digital platforms, maybe fintech and insurtech kind of products will come through. As you rightly mentioned, they've proposed to introduce a framework to compensate the customers with about 25,000 rupees in case of any loss that they may incur in these small value fraudulent transactions as well. So such measures, of course, are necessary, but it will have a bit of a caveat there. Lagged credits and additional authentication may be needed in the future, especially for senior citizens as well. So safety net being put in there because a lot of digital products related to loans, pension schemes, as well as some insurance also are being sold by many third-party platforms as well. So a big move coming in there for consumers from the RBI.
All right, thanks for joining us on that, Aishwarya. I want to just run through a whole host of other earnings reactions today. Let's pull up Nykaa, let's pull up LIC. Some of these names, Hitachi Energy, some really strong earnings reactions that we're seeing across the board on some of these counters in particular. FSN is up 8% now, and a complete re-rating coming in. We had a whole host of brokerages also now giving the stock a thumbs up. Mr. Chokkalingam, let me get your take on FSN e-commerce. I'm not sure if that one's on your radar.
Nykaa, I'm not comfortable. I mean, it trades at over 500 PE. The profit growth is not commensurate with the PE. Hitachi, yes, valuation is stretched. It is trading at around 100 P on trading earning basis, but it is a fabulous growth story. December result also very impressive. So therefore, one can hold Hitachi.
All right. So those are the names on the upside. On the downside, we've got Siemens receiving new order growth, but softening on margins. We've got for example, a BEML shares that are down post earnings. A couple of these are actually not looking so positive. Siemens is down 4-5% today. And let's pull up BEML for you. So what's happening on the engineering and infra side, Mr. Chokkalingam? And is the market just expecting a lot more from some of these counters?
The one reason for the names you have mentioned, like Siemens Energy, BEML, is a great company, no doubt. But the valuation multiples are extremely stretched. That is why they are struggling in this overall weak market to outperform substantially. My take is on L&T. I prefer because its valuation is much cheaper than all these other three names. And not only that, the kind of order book it has received and the kind of diversification it is doing in terms of data center, electronic manufacturing, semiconductors, scaling up the realty business. Also scaling up on nuclear business. So they all give a lot of confidence in the stock. And the performance in Q3 is also very good. So in the engineering space, I would recommend L&T.
Okay, keeping you up to date with the RBI's big move today, they've struck a confident tone despite global uncertainties. Sanjay Malhotra says India's growth momentum remains strong. Inflation is benign and the central bank has enough room to stay growth supportive while safeguarding financial stability. Here's what the RBI governor said while explaining the MPC's policy stance.
The Indian economy continues to register high growth despite a challenging external environment clouded by geopolitical uncertainties. Benign inflation provides the leeway to remain growth supportive while preserving financial stability. We remain committed to meet the productive requirements of the economy and sustain the growth momentum.
The RBI has maintained the policy rate. They have not changed anything. But you need to look at the rate cuts that RBI has done in this cycle is close to 125 basis points. plus there have been, multiple liquidity measures that RBI has taken for past 1.5 years. Just to give you some numbers, uh, RBI has given lots of OMOs, lots of FX intervention swaps, plus lot of repos also. To put together all these numbers add to, almost 17 lakh crores of liquidity measures that RBI taken on top of 125 basis of rate cuts. So obviously the economy demanded these from a central banker, and the central banker has delivered it very properly. Uh, our house view has been for last couple of months that the rate, we are actually nearing the end of rate cut cycle. We might have a long pause by RBI before we see it moving to the other direction. So it's a pause from our side for maybe next year or so.
All right, lots of comments coming in there on the policy access mutual funds. Aditya Pagria there explaining what it means for the rate cycle ahead. Counting down to close now, we're just about 5 minutes away. Mr. Chokkalingam, I wanted to ask you, when we're looking at valuations and really assessing some of our stock calls accordingly, do you feel the markets are going to be in a somewhat of a period of recalibration across the board, whether it be in the frontline names, the broader markets? I'm not sure what kind of signal they're waiting for, because it's really very, very stock specific right now.
Yeah, you are absolutely, right in making, the statement which is relevant to the current market condition. Till March end, it is likely to be weak, and beyond that, I am saying it is likely to start improving significantly. The biggest challenge to the market is the liquidity. The promoter selling has taken away nearly 2 lakh crore from the market in the last 2 years. And again, IPO boom has taken away about 2 lakh crore. And then you have a lot of newly listed IPOs have, the lock-in period expiring. So more selling pressure will come. And also in the last 2 years, FEIs have sold in the secondary market a huge amount of money. And lastly, if you take a small and mid cap stocks, almost 70 to 80% of the stocks are down substantially from their record high, which we saw in 2024 September, somewhere from 20% to even 50-60%. So that also means, a lot of retail investors' money get trapped in those unsuccessful stocks, so they are not able to find liquidity. So the liquidity is a single biggest factor. So why I am saying after March things will improve. Obviously, the IPO has toned down, the boom will tone down further. And the trade deal with the US and the European Union will definitely help rupee to appreciate. And when FIs see that, I think they will start coming back to India. And the excellent, appealing valuation of small and mid-cap stock, which are beaten down for last 1.5 years, that also would attract the retail investors in the new financial years to bring some liquidity. So therefore, I firmly believe that in the new financial year will be a beginning of robust year for Indian equities, especially for small and mid-cap stocks.
All right, oil and gas today up about 0.5%. There's some amount of a green tick there. Financial services just about 0.5% as well. We're counting down to close now. We've had a decent day selectively on certain stocks. So Bharti Airtel's up 2-3% post earnings. We've seen an HUL move higher, Power Grid, Bajaj Fin, for example. We've talked about, of course, Nykaa. And Kotak Mahindra Bank has been looking good today. It's up about 3%. Axis, ICICI following suit on the private sector name. So that's really on the gainers list today. And good solid moves coming in there on some of those. PSU banks have been lagging behind otherwise in today's session, but some of those key private names have definitely had a good day, as well as the financiers. So that's on the financial pack. Remember, it was the RBI policy day, and sounding pretty strong on growth momentum going forward, even though they have, of course, made some key announcements for MSME loans. That's why your financiers are buzzing. And overall, kept rates unchanged for the moment. Other than that, in the broader markets as well, some amount of earnings action. So something like a Hitachi Energy has moved today. We've also had other earnings from an FSN e-commerce. We've got on the downside like a BEML, a Siemens that didn't react too well this time around to earning updates, and a whole host of other names, of course. Bharti as well has been seeing a reaction to earnings, and a good one at that. So that's really what the market's been looking like. Overall, of course, it's a little weak. I do want to talk about auto and auto ancillaries as well, Mr. Chokkalingam. Something like an MRF was buzzing today, and it's just a key signal of some of the other action that's expected in the auto and auto anch pack as we move forward. What's your view, and would you have any select favorites?
Yes, certainly I am very optimistic on auto space. Within the automobile manufacturer, I prefer M&M followed by Bajaj Auto. And as far as components are concerned, I would be very bullish on the tire companies because they have got a multiple triggers. GST rate cut was happened on tires. The rate cut happened for automobiles which use the tires, and the rate cut happened for tractors which also uses the tire. And so then the automobile sales started picking up because of the overall rate cut. So, and also oil price is down from where synthetic rubber is derived, and that would be beneficial to tire companies. So I believe there are multiple triggers, and this is just the beginning of earning upside. Re-rating valuation of these tire companies also possible. So therefore, I would suggest buying tire stocks like MRF.
All right, Mr. Chokkalingam, thanks so much for joining us and talking us through some of your key strategies today. We've, of course, been tracking the closing bell for you, and we'll bring that up for on your screen in just a matter of seconds now. Quiet close for the index, but in the green, we're just about 30 points up on the Nifty, 25,674. Clearly, range bound is how the markets are continuing to be as they digest earnings, they digest the RBI policy, and of course, both the trade deal and the budget, two very, very big triggers, all in the same week. It's been an incredibly news-heavy week. We saw that knee-jerk reaction to the STT on Monday post the budget. We also saw a knee-jerk reaction midweek on the back of the IT rout on Wall Street overnight, and that led to huge uncertainty and turbulence. And Nifty IT, of course, continues to trend incredibly weak. A lot of pressure, 1.5% down in trade. Nifty Financial Services post the RBI commentary, seeing a marginal uptick about 0.4% right now. MSME loans, that's where the focus is. Real estate is intact, 0.6% higher. Prestige, in fact, having a really good day today. So that's on the realty front. Metals are steady for the moment. Silver is continuing its volatility, and given the current geopolitical environment, we'll wait and see how things pan out. But it's also just a recalibration, I think, on the silver prices after the huge run-up that they have seen. On the gainers and losers list, you've got, for instance, a Titan looking really good. Tech Mahindra, ITC, some of the names on the upside, Bajaj Finance, Kotak Mahindra Bank, HUL following suit. So those are some of the gainers for you today, and a fair amount of them on your screen, and good solid moves coming in as well. And on the loser side, you've got pressure on tech. So TCS, Tech Mahindra, for instance, some of these continue to see some pressure. HDFC Life today down about 2%. Bajaj Auto, Asian Paints, Adani Ports following suit as well. So that's on the index. And we'll take a look at the broader markets as well, give you a sense of some of the key gainers and losers from the broader markets. Hitachi Energy clearly stood out, and MRF stood out. Poonawalla Finance stood out as well. So some of these names, for example, and we'll pull up a few more for you. In terms of the macros, gold and silver. Gold, of course, is steady at the moment, starting to tick up on the back of safe haven buying with unrest, in the Middle East. We've also got silver continuing to be volatile. All of your risk-on assets like Bitcoin, etc., coming back into action on the back of those geopolitical tensions. But otherwise, from a pure equity point of view, here are some of the other gainers in the broader markets: a Graphite, an Easy Trip, for instance. Some of these names, Godfrey Phillips on those price hikes up about 10%. India Cements was moving today. That one was also up about 9-10%. So looking good on an India Cements today. And other than that, let's pull up some of the losers as well. We've had Poly Medicure down about 7%. BEML, it's a reaction from the markets, as Mr. Chokkalingam was saying, not too happy with how the companies are keeping up with the valuation picture. So expectations are just very high on earnings. Hikal is down 6%. Nazara Tech, Uno Minda, some of these names seeing cuts in the broader markets. Let's see when we'll start to have some amount of a catch-up when it comes to mid-caps and small caps. For now, the index at least quiet as it digests a whole host of news from the week. And as we kickstart a fresh week on Monday, let's see what action will be in store then. Thanks so much for watching.